As Canadians renew their mortgages, there's a lot of questions around fixed and variable products, and a lot of clients are having a hard time selecting the right product. And ultimately, going fixed, going variable, the Bank of Canada, maybe more cuts. Do I stay fixed? Do I take on the risk of a variable? What if I told you there's another alternative on the table, what we call a hybrid mortgage? We'll unpack that and more this week. Once again, thanks for stopping by. If you have not yet subscribed to the channel, please consider subscribing. Hit that notification bell while you're down there so you don't miss a beat. As well as let me hear from you in the comment section below. What are your thoughts? Bank of Canada is meeting again on October 29th. Are we going to see the Bank of Canada cut? Let me know in the comment section below. More importantly, like and share the video if you learned something new or you know someone that could benefit from this content. Feel free to share the video. Let's get right into it. So ultimately right now, we've been having this conversation over the last little while as millions of Canadians are preparing or have prepared for mortgage renewals or looking at their options moving forward. We've been inundated with calls for clients that we have that are looking at their options right now who want to renew their mortgage. Maybe they don't want to necessarily refinance their product. We've talked about it before at great length, but ultimately right now, we've talked about the fixed and the variable. So just to do a quick recap, obviously right now for a lot of our viewers, if you're a first-time home buyer, if you're an existing client with a mortgage or someone looking at this video and say, hey, what are my options at renewal time? Well, ultimately you can renew with the same lender or you can reach out to a mortgage professional and get some quotes, see exactly what's offered to you out in the marketplace. The other thing is important to understand is, are you looking at a fixed rate or a variable rate product? And importantly enough, if you're looking at a fixed rate, you want that stability. You want to be able to put your head to bed at night knowing for the next 3 or 5 years or 6 months, whatever you select at that fixed rate, that you're going to not see any changes to your mortgage. Now, ultimately, fixed rate mortgages, because of that security, it's like an insurance premium. You might be paying a little bit more on the back end if you get out of that mortgage too early, if you don't actually end up going to the full contract term. Now, ultimately, there are things like portability and transferability in those mortgages, and we'll see you all next week. Each mortgage is different depending on where you're getting that mortgage from. Is it a major bank, a broker-friendly bank? Is it from an equity lender? Is it a private lender? Understanding those options is super important. On the variable end, you have to understand, once again, if that variable rate mortgage is either a static payment or adjustable. The difference is obviously adjustable, meaning your payments will go up and down. They will fluctuate with the Bank of Canada. When the Bank of Canada changes that overnight lending rate, that policy rate, you could see prime go up or down. We just saw prime go down 0.25%. So with most lenders, prime has been reduced. And ultimately, most banks with adjustable rate mortgages, those that offer it, that means their clients, their mortgage holders are going to see a reduction in those payments. And that will continue to go down as long as the Bank of Canada cuts. If the Bank of Canada decides to hike, then ultimately your payments will go up. The other type of variable rate product is that static payment variable, which was obviously a big one for contention with a lot of Canadians because their payments did not move. So although they didn't absorb that fluctuation in payment, their payment remained the same. More of that money went towards principal than towards interest, or at some points throughout the last couple of years, a large portion of that payment was all interest and none of it was going towards principal. But obviously that has recalibrated right now with the fact that the Bank of Canada has pulled back. So we don't hear much of a conversation around that and much more, but ultimately deciding on whether or not you as a Canadian want to see your payments go up or down. Now, the big one, right? This is the reason why you're probably tuning in is, what's this hybrid mortgage? What, Anthony, are you talking about? I don't have to pick between a fixed and a variable. I can have the best of both worlds. Well, ultimately you can have what's called a hybrid mortgage. Now, just as a quick caveat, not every single bank will call this a hybrid. They may call it something different. They may require you to be qualified for a line of credit so that they can do this. So there are certain parameters, there are certain restrictions on some of the major banks. I'm not going to go through it in this video. If you want to find out more about a hybrid mortgage, you can obviously speak to your mortgage professional about it. You can reach out to us here at InTouch Mortgage Solutions. Be happy to discuss the options with you. But most importantly, the hybrid mortgage, or the idea behind a hybrid mortgage, is that or true hybrid mortgage, I should say, you could take, let's say your balance, let's say it's a $500,000 mortgage and you're not sure if you want to go fixed or variable. You don't want to maybe lock in all of it. You want some of that versatility of that 3-month interest penalty. Remember, with a variable rate mortgage, just a quick side note, take a variable rate mortgage. You can break the mortgage at any time with most major banks. Obviously, conditions apply depending on your lender. You can take that 3-month penalty as a calculation for a variable rate mortgage. Now, ultimately, right now, what that means is some clients that are thinking about, hey, my mortgage is coming up for renewal now, but I'm planning to sell or buy or do some renovation or pull equity out, something down the road in the next little while, maybe 1 or 2 years from now, maybe even 3 years from now. So ultimately, selecting the right product or gauging that timeline can be a little bit complicated. So especially if they're coming up for renewal now and they haven't really had the chance to let that, list that property. And trust me, we have a lot of clients that were planning on moving. Obviously, things threw a little bit of a wrench, the market, the economy, interest rates, Bank of Canada, all this, throw a wrench in some of these people's plans. But ultimately, their decision is to continue on. So this hybrid model allows them to basically say, okay, I got a $500,000 mortgage. I want $250,000 of that mortgage to be at a fixed rate locked in. I want the other $250,000 to be on a variable rate component, which means, that payment, that amount will move up and down as discussed, depending on the lender, if it's static or adjustable. Or on the fixed side, basically they're mitigating that risk so that not all of their payment will go up or down, so that they ensure that if interest rates go up, hey, they're locked in on a small portion. Hey, they have the ability to, mitigate some of their penalty on half of that mortgage. There's so many different ways you can slice or dice this hybrid mortgage. You can do, more of it as a fixed, less of it as a variable. You can do more of a variable, less as a fixed. And once again, this is something that you should be talking about with your mortgage professional. Obviously, understanding your appetite for risk and understanding where you are in your journey of home ownership, right? Understanding your risk tolerances. And at the end of the day, if the product is right for you, if you can have access to this product, if you're applicable or able to apply for this product, obviously depending on the banks, not every bank, as I mentioned, can do it straightforward as a split mortgage. You might have to take on a line of credit and then lock in a certain portion of that, which means you may have to qualify at a higher rate because of the line of credit. So ultimately, these are things that we need to discuss with our clients, and we're having this conversation in real time when we're talking with clients, especially when they're approaching renewal. Either they're refinancing, restructuring their mortgage to consolidate, or they're looking to get out there and buy. But at the end of the day, ultimately, right now, my suggestion is for a lot of clients we're talking to that can't make a decision on fixed or variable is presenting them with the option for hybrid and letting them simmer on that, letting them take a look at it, especially with the fact that we think that the Bank of Canada could be cutting it additionally 2 times before, the end of the year. We got another meeting in October, we got another one coming up in December. What do you think the Bank of Canada is going to do? You think it's wise to split your mortgage up into a fixed or variable? Let me know what you would do or what you've done in the past. Leave those in the comment section below. But until next week, thanks for stopping by, and we'll see you all next week.